Good afternoon, and it's a pleasure to be here this afternoon to discuss a very interesting topic that revolves around investor community, the capital markets, and the opportunities in the market. And again, this topic is what we call smarter markets, safer investors, AI, digital finance, and the future of investor protection. But let's break it down a little bit. What does this entail? The Nigerian capital market in the last 2 decades have seen significant progress. It has evolved. We've seen so much introduction of new things. One from introduction of new asset classes like green bonds, private markets, commercial papers, taking a larger scale and form. We've also seen introduction of even new technologies across settlements, trading, risk management, and even the derivatives market has also taken new dimension and new activities in that space. So in the tech space, you've seen it was blockchain first of all, then you've seen a lot of fintech activities, and now I think the buzzword is artificial intelligence. These innovations are opening doors clearly. They are introducing new aspects of the capital market, and also bringing a new set of investors into the market. And then the existing investors are also considering new opportunities or even further drilling down into the existing opportunities that they have hitherto participated in. However, how do we keep markets safe, transparent, fair, and resilient in the space of these new trends and these new happenings? How do we protect investors in a world where things are constantly changing and products and the technology driving those activities in the markets are constantly evolving? With me here to break down this topic into fine details are some of the best experts in their respective fields across the capital markets, from trading to clearing to settlement to risk management, you name it. In one form or the other, that expertise sits amongst these 3 colleagues of mine. And I will start from my immediate left, Oluwaseun Afolabi, who is the Senior Vice President at FMDQ Securities Exchange and also the head of market architecture at the exchange. Seun, thank you for joining us at this session. Seun brings decades of experience as it affects market architecture, product design, as well as just organizing the market across stakeholders. In addition to that, I have the pleasure of introducing Jumoke Olaniyan as well, Executive Vice President at FMDQ Securities Exchange, where she drives business development across all the stakeholders in the market, making sure that stakeholders are well carried along on the product side, as well as the opportunities that are available in these on the FMDQ platform. Then I have Emmanuel Alawa as well, who is the Senior Vice President at FMDQ Depository. He brings on board decades of experience on the technology side, as well as in FMDQ Depository that drives the settlement of transaction, custody of securities that are traded on the FMDQ Securities Exchange. Thank you for joining us this afternoon, and I hope that you will help us break down this topic into finer details. Thanks for being here.
Thank you very much, Segun. Happy to be here with you this afternoon.
Okay, and they say ladies first. Jumoke, please allow me to start with you. The challenge and indeed opportunity for Nigeria is to build a market infrastructure that not only supports today's products and participants, but is ready for tomorrow's opportunities and innovations or innovators as well. Where do you see the biggest opportunities for strengthening Nigeria's market infrastructure for long-term growth, and in terms of even making it a platform for people to take advantage of and leverage the strengths of that infrastructure?
Brilliant question there, Segun. I think over the last couple of decades, there's been an evolution of innovation and development that have impacted the capital market largely, and of course, the financial market infrastructures are always typically at the center of this, starting from digital innovation to what we could now call Web 4.0, that encompasses all of what you're talking about around AI and the likes. What I have seen happen from the FMIs is that as this evolution and development has happened, they've tried to keep abreast, not losing the fact that they are central platforms, and so they are typically just enablers of which some of these innovations then are able to be deployed in the sense that whatever the financial market infrastructures are doing, participants who would have direct impact, direct use of these innovations can then leverage off that. So crypto, you've talked about the blockchain, you've talked about now blockchain have been deployed from trading to clearing to settlement. Off the back of that, you have cryptocurrency, digital asset tokenization, all happening because financial market infrastructures have taken the task of having implemented blockchain technology off the back of which these innovations can therefore be deployed. So if I go to your question to say, where do I see the biggest opportunities going forward? I think it remains what the FMIs have continued to do, to dimension what the future evolution is going to be and see where they, as FMIs, can implement central upgrades, central innovation, central platforms that the future innovations will then, leverage on. If we look at it and think AI is going to be the one that seems to be the biggest thing coming in the future, right? I think quickly and say, how can the FMIs play in this? I think I'll talk about it in two buckets. Directly in the sense that, one, how can the FMIs themselves use AI to improve the services that they offer? Maybe in surveillance, maybe in server space usage, latency for trading, and the likes. That's where I will see opportunities for the FMIs. But when I think about it from an indirect perspective, which is that the dealers in the market, the investors in the markets using AI, I think of how the FMIs need to be able to give these participants in the market access to data, access to their servers, access to the information which we know the AI is going to plug off or leverage off, such that they can then do their trading predictive analysis. They can use the AI for candlestick analysis, investment analysis, portfolio management, balancing, and the likes. So in either case, whether it's directly or indirectly, the FMIs definitely have a huge role to play in the sense that they must understand what is the evolution coming in AI. And we have seen that AI is, the application of AI is unimaginable. You think you've seen the peak of it today, and tomorrow it's gone, farther than that. So the FMIs must be, on their toes, abreast of what is going on in that space, put in place technology and access that, the participants in the market can then use or to be able to deploy, the AI technology out there. So those are the opportunities that I think infrastructures must not lose sight of and be fully aware of.
Thank you, Jumoke, and that's very interesting because as the conversation around infrastructure continues to evolve, it then becomes very clear that in some form there's the need for knowledge on the infrastructure side, and then on the investor side as well, in terms of how, when these technologies are deployed on the infrastructure platform, the investors also need to take off from there and also take advantage of these opportunities. But first of all, there's that bit of knowledge. And Sean, please let me take you on this. In terms of financial literacy, what strategy do you think that investors can employ to ensure that they are privy, they are informed, one, on the opportunities that exist in the capital markets, and beyond that is even knowing how to deploy these opportunities? For instance, now I can go online and use an AI platform to ask for what investment should I put my money in? But at an holistic scale, what are those opportunities? What are the strategies, rather, that investors should consider in getting informed from a financial market literacy point of view?
Okay, thank you very much, Shagun, for that question. I think at the very center of the question you have spoken to is a very, very significant theme, which is really about how education is delivered going forward to investors in markets. So As Jumoke alluded to earlier, AI has very vast reach in terms of its deployments on its scale and scope. And again, the same thing is going to probably apply to education as well. We're no longer in the days when every information you needed to get must be done in a traditional classroom setting, right? Luckily, COVID forced all of us to rethink how we delivered investor education to everyone very quickly through what I call the intermediate version. We started doing sessions virtually. And I think the use case is going to be somewhere an advancement of that. But now, critically, the decision and the effort for knowledge is being handed more to the investors themselves, right? In the hybrid situation I talked about, it is the educators, market infrastructures, academies, training institutes that set all of that together. But what that also did not take cognizance of is that in putting that in place, you lose the capacity to adequately segregate investor categories into their personal preferences, their biases, their even pace of learning. Now, that next stage that AI does is that it now hands the initiative and the prerogative to investors themselves in saying that you can now design how you want to learn. Look, platforms like Market Infrastructure and Tech Training Academy would always be here to stay because they are the curators of the things that you want to learn from, either in form of the data, the information sitting on it, and that, information that you need to learn. The investors themselves are going to be able to use this massive exploration in AI tendencies and capacities to then plug into the information that is available in those infrastructures, educators, institutes to seem able to learn about investment opportunities at their pace in a manner that allows them to understand it and also then begin to think through how they want to participate in the market. So I think from a literacy standpoint, the critical thing for me is that we're sort of getting to that point where we'll be able to leverage on AI and those technologies to hand in investor the prerogative and initiative in designing how they want to learn about everything that happens in the financial market. And of course, ultimately then drive participation by even investor categories that maybe were not necessarily interested because they always thought financial market is for all these, very serious corporate, institutional investor, or very sophisticated to begin to say, I want to know what's going on in there. And luckily, I can just, leverage one AI tool to saying what goes on in this market, whether it's a product, whether it's a particular market infrastructure ecosystem, and even generally in the economy itself.
Interesting. So it appears the investor now is sitting in the driving seat of leveraging technology and content in extracting value.
Correct.
Very interesting. Emmanuel, let me come to you. From your years in technology, I guess you will agree with me that these new technology trends are not deeply rooted. Algorithm trading, for instance, or AI or blockchain technology is not widespread rooted in Nigeria. But at the same time, while we envisage that this technology will add value, how then do we ensure it is safe for the investors? It's taking a form where we are not eroding some of the gains of yesteryears. So in bottom line, what are the pros of deploying this technology relative to the consequences of deploying them as well? And I'll give you a small example. I learned that AI is being deployed in in cars whereby you don't need a driver. With all the benefits, potential benefits on that front, I also learned that one of the car went under a truck. Mm-hmm. So there are pros clearly and there are consequences, but definitely the consequences does not mean that we should not make progress. But just tell us, are there benefits and consequences on deploying this new technology in a developing markets like Nigeria's?
Thank you. Definitely there are pros and cons, and there's no solution that doesn't have pros and cons. And if you don't take care of the cons, then to definitely erode what you've built over time and what the benefits of the new technologies are bringing. So in terms of pros, what AI does for you is to make possible discovery of new business models, an extension of services to those that have been not served or underserved before. Technology drives efficiencies in operations, it drives efficiencies in services, and therefore it's going to lead to lower cost. So you can serve customers at a lower cost structure than you've ever been able to do before. So what operators should be doing is to see how they can leverage these technologies, structure services, and identify unserved and underserved markets to deliver value to them. If they're able to do that, they're going to uncover new revenue streams. They will be able to do that profit as well. Okay. Secondly, there are things that you can do to serve those markets. You can have frictionless onboarding, for instance. I opened a bank account recently out of the country without visiting a branch. Even the bank does not have a branch, doesn't have a physical presence. So frictionless onboarding enables you to onboard what has traditionally been difficult at little or no cost. Again, those are the kind of solution stacks that you put together to be able to serve those markets. You can scale up micro investments to an extent that it becomes significant. Robo-advisory in India was estimated to reach about 16 or over $20 billion. And they will be serving about 3.2 million individuals by 2026 or 2028. So there's definitely an opportunity in scaling things up, in serving new markets, and yet making profit. That's number one. Number two, technology also enables better decision making. So decision support systems that has traditionally been outside the reach of individual investors or even some institutional investors become immediately available. You can do sentiment analysis where you look for social cues and social triggers to determine to anticipate what may be going on. You can do research, investment research, using generative AI now, and you'll be shocked at the quality of what you're going to get out of it. So again, you're beginning to see the way technology is beginning to empower individuals and institutions, but also empowering operators alike, service providers. Like I said, efficiency and control. With efficiency means things are happening at faster pace. Your control systems must match up with the speed of executions or you're going to run into trouble. And therefore, if you have faster settlements, if you have real-time, you need to have real-time monitoring systems for your risks. You need to have, if you're going to look for KYC or AML, you need to be able to do spot checks and ensure that you are not serving people that you should not be serving so that you don't get into trouble. These are a few things. There are definitely more things, but because of the time that we have, I'll just limit it to that for now.
Thank you, Emmanuel. And those are very, very cogent points that you've raised. And Jumoke, let's take off from there. How do you ensure that these innovations do not erode trust, do not erode confidence in the market, do not put investors in a difficult position where they lose their shirts, if you allow me, in this capital market ring of play? How do we ensure that investors are indeed protected?
I think it starts with, first of all, who are the champions of this innovation, pedigree, and history of what they've done in whatever field they're coming from, transparency and information and how the innovation itself has been developed, which gives you information around the rigor and the depth and level of research, re-research, testing, and the likes into those innovations help. And then it lands with the deployment of those innovations and the various, what I would call, guardrails that are put in place to ensure that the impact of these innovations, when they are being used, deployed, does not go off tangent. We know it can. and to be forewarned, obviously, and be prepared is the best thing. And it ties very nicely into what Emmanuel was talking about. And as he was talking, I was just thinking about this, that even in the manner of the implementation of these innovations, the way the guardrails are put in place to, phase, let me use that word, how these innovations are deployed is also a critical way to make sure that, we don't get things wrong when we do that. For example, if you look globally, you will see that the adoption of, pick any innovation you want to think about, whether it was in the past or even the current ones, digital innovation, blockchain, cryptocurrency, AI, is at different paces in different regions across the world for various reasons. Because each government, each regulator, each region is determining what levels of guardrails they would like to have before they're comfortable for these innovations to be deployed. So having that, first of all, would also be a way to help ensure that what is put out there does not implode in our faces. And so if I come to Nigeria, for example, I think the first thing we've done is, for example, the law, which was recently passed, the Investments and Securities Act, which first of all has given the core foundation for us to be able to use some of these innovations, especially things like digital assets, cryptocurrencies, and acknowledging them as securities, first of all, was a critical guardrail we needed to have. So first of all, there's a guideline around it from a legal perspective. Now, off the back of that, the SEC has now taken those laws and start to put regulation in place. That's going a little bit more detailed into say, while we've accepted these things as adoptable in our capital markets, what are the details around how we use them and implement them in our market? And there are so many things. There's been the regulation they've released. And for me, one of the biggest one, another thing they've implemented is what we call the sandbox, wherein in a safe environment, in a limited environment, these innovations are being tested, right? And different types of scenarios are being thrown at them to make sure that the possible real-life situations that could happen, we're testing them out to see and reacting to them in a way that will be safe for investors, in the market, in the capital market space. So, as well as then the education as well, which is part of what we're doing, here today, talking about these things to acknowledge them and therefore jointly agree how do we move forward on implementing these things. So where we have the law, we have these guardrails in form of regulation, in form of guidelines, in form of business practices, which would, if you look at guidelines and business practices, will cut across not just what you need to comply to, it will go into what's the minimum technology I need, what's the minimum transparency and information needed, timing of those transparency, the competent level of people who can even participate in this product. Then all of that coming together, all things being equal, creates a safe environment for investors to be able to use these new technologies, these new innovations in a safe manner, in a manner that grows. Of course, the word of caution would be then for, and again, Emmanuel had mentioned it, that as we use this product, they would continue to evolve. And so everyone, obviously, right from the regulators to the intermediaries, the financial market infrastructures, the end users, must all, simultaneously, therefore, continue to be developing and evolving along with these technologies, with these innovations, so that we're not left, there's no gap between the guardrails that are put in place to ensure that they are safe to use versus the growth in the development of those innovations.
Thank you, Jumoke. Just drawing attention back to, again, where we started from, to say, this future, we need to shape a future, a capital market future where we've all agreed that it has to be smarter. We've all agreed that literacy, investors across, not just investors, players across investments, investors, infrastructure, everyone needs to be informed. We need to take care of literacy. And we've also dealt on something, Jumoke, that you've touched on, which is that the guardrails must ensure that there's safety. So in ensuring that investors are safe, which are the core of our markets, Sean, where do you see, what are the threats that you feel these investors are, that the threats that is confronting the safety of capital market investors? What are these threats, and how do you imagine, first of all, what are the threats, and how do you imagine that they can protect themselves against it?
Right. So that's a very, very, I think that is a very, very insightful angle that we're approaching it from now. And I think traditionally, if you ask yourself that, what is an investor always concerned about when they're about to get into any investments, at the very fundamental start of it, or the primordial concern everyone has is the risk of losing their money, right? And that can happen in any form, whether it is in the form of what the geeks and the nerds will call counterparty risk, or whether it is in terms of just the market risk. I bought something at a certain price and then another day it's gone completely. So I think it is then working backward from what the average person's concern is about even an investment, that you then work back to then beginning to see what you need to concern yourself about. And I'll probably say that beyond all of that, one of the critical things that you need to then concern yourself in terms of all of that and how to, to get investors comfortable enough and what they might be concerned about is at the very center of something Jumoke was talking about earlier, which is how, operators themselves, and I think even I alluded to it earlier, how they use some of this technology. Because the fundamental difference, between when large institutions in financial markets, whether in the form of a regulator, as Jumoke alluded to, the SEC putting guardrails and putting all of this, what I call conduct framework for how you use it, there is this new technologies and who uses it, to how operators and infrastructures themselves then work around what those guardrails are, is part of what begins to get people comfortable enough to say, you know what, I'm going to go here, because that risk I'm concerned about, the risk of losing my money because I don't know who I'm dealing with in the market also with that investment, is completely sort of reduced significantly to a point where I can accept the risk. And what does that mean in real terms? So again, infrastructures, you would know, again, find themselves taking on more responsibility from a market development standpoint. And what does that really entail? It means infrastructures themselves are beginning to play that sort of intermediary role where they are the citizens in the financial markets that take what is primary regulators' own guardrails and all of that framework, and then begin to sort of democratize it to a level of even operators and investors themselves, such that, again, anybody who wants to avail himself of maybe developing a new product or creating investable asset classes, leveraging on AI, digital technologies and all of that, knows that there are certain protocols that you must meet to be able to do that. The infrastructures themselves can go one step further to saying, you know what, we're going to lead this, and we're going to make sure that what we are putting together has scaled the hurdle of all those guardrails that have been put in place. Because ultimately, investors take comfort in institution and players that they know has demonstrated some sort of historical know-how and that sort of experience in doing things like that. It gives them that sort of respite that, okay, this is what I'm going into, potentially my risks are significantly lower, even if the underlying technology and all of those things are fairly new, and all of this innovation, I may not be that knowledgeable about it, but hey, it is being done on the basis of, say, for example, an SEC framework that speaks to how we can create digital assets and all of those things. So everybody then begins to take comfort in that, and that's why it's very, very important that in doing all of this, everybody begins to find their place. So the financial market infrastructure then piggybacks what the primary regulator like SEC have done, and start to put in place those sort of protocols that allow market operators to be able to play and carry out the intermediation role they carry out with investors, so that on one end, investors are seeing these participants and knowing, well, if this that is being put in front of me as an investment opportunity has already gone through all of these sort of standards, then maybe
shouldn't
my
be too
risks
worried.
are again are significantly reduced, and some things like that.
Brilliant. Thanks, Sean. And two points I took away from you is the fact that yes, there are risks, yes, there are threats, be it on the investment side, counterparty risk, market risk, and the likes. There are also risks on your activities in the market, but more importantly is that the regulator has put together a framework. The market infrastructures are built on that framework to deploy it down to the operators and the investors. So everybody kind of gets a semblance of a structured environment to play in, at least with significantly reduced risk. Okay, Emmanuel, let's take that a little bit further. What are the opportunities that technology opportunities to leverage technology in addressing potentially other risks from participation in the market, maybe fraud, market surveillance, supervision? Are there opportunities that technology can also play in addressing some of those threats?
Thank you. There are definitely things that technology can be leveraged for. So first is, let's take it from the foundational point. Identity and access. Digital identity is now a gold card, all right? If it's compromised, you are compromised as an individual, you are compromised as an investor, you are compromised as an institution. So it's important to guard the digital identity of each individual. Onboard individuals that are being qualified, and I'm using qualified not in terms of, not the way the regulator defines qualified investors. I'm just talking about validating the identity and ensuring that it is safe. So know your customer becomes very important. AML also becomes very crucial. And you need to be able to do it, again, at a very fast pace. So there's eKYC type solutions that you can use. You need to be able to do sanctions monitoring. You need to be able to do PEP monitoring, politically exposed individuals. You need to be able to do social media monitoring, adverse social media. You need to be able to determine relationships of those that are interacting with you with other individuals that may not be welcomed on your platform or within the ecosystem. You need to know the network that individuals that are trying to interact with the capital markets belong to. Again, this is about safety, the systemic safety and safety at individual levels. So that's number one. So your identity and safety of everybody is interwoven, and you've got to take that systemic perspective. Then access to systems. Everything is being digitized means everybody has access to everything they need to have access to. It should be role-based, all right? The concept of zero trust comes to mind, where you're only giving access to what you must have access to and denied access to every other thing on the platform, okay? There are other concepts that can be layered. So we call it layered solutions, security solutions, to ensure that even if you break through one, the other one is there to prevent you, okay? Then there's cybersecurity. With interconnectedness means the attack surface suddenly starts increasing, for institutions, for instance, for operators that are providing services. I need to be able to protect against that. Your relationship with third parties will be properly assessed to ensure that they don't introduce risk that becomes a contagion to yourself and to others within the ecosystem. Very crucial. So again, we begin to go from the mentality of individual entities to systemic perspectives and putting solutions in place that really protects people. So I've spoken about AML, KFC, guarding identities, protecting individuals, and all of that. Data also is crucial. Data is not gold to everybody. So there has to be data governance, okay? Within each institution, their data governance practices must be very strong. What is the source of data? What is the quality of data? Don't forget that AI is based on data, and AI is trained on data. So if the data is not of good quality, the outcome of AI will be bad. So there are different things within data that needs to be taken care of. There's bias that you need to engineer against. There's drift that you may need to, in your models, that you need to monitor and guard against, okay? And sharing of information. What information do I have access to? The visibility of the models you're using, the accountability, what it's doing, why is it doing it, how is it doing it? And if there needs to be forensic analysis, can it be independently verified? Again, we're going from individual, institutional mentality to systemic perspective. And this needs to be enabled through regulation, and needs to be enabled through intercompany and individuals through B2B, B2C type interactions. So all those things will protect the individuals and will give them confidence to operate in the market. It therefore means that as an operator, if you lose people's data, if confidential data is exposed through your own carelessness or through your infrastructure operations, you're putting yourself at risk, because there will definitely be reputational damage. There will be legal issues. There will be compensation issues that solely and everybody's becoming aware that I can take you to court and take compensation of you. Okay. So again, the cost threshold for operating is not just limited to the cost of operating the solutions or offering the services. The potential implications of you introducing compromise into the environment is beginning to scale up. So we all need to guard against that, and that's very crucial. But if we do all of that, then every individual and institution becomes confident that it can interact safely with these new solutions, consume the service, and everybody takes the upside. But it's crucial to be ensured that identity is managed properly, data is properly governed, access is properly controlled. AML, I'm trying to go to anti-money laundering. I mean, the safety of the whole platform and ecosystem is closely guarded, and you only onboard those that you validated, okay? If you go to post-trade, for instance, so the beneficial ownership needs to be validated. Who am I sending money to? Okay, and if you have an entitlement, corporate action service, am I paying to the right person? All right. So again, it goes from one end to the other. You cannot do one part. You've got to do the whole part, and you've got to see yourself as an active member of an ecosystem. And take that, and then the regulators also need to ensure they create an enabling environment and the regulations that promote the right practices, the right behavior, without restricting innovation and stopping people from moving forward, and institutions from moving forward.
It's interesting that you put it in this light. So clearly, there's a compelling case for the deployment of technology in fraud prevention. From the way you've layered it now, and it's clear that if you have to start thinking of technology to ensure that the data inputs are, first of all, done right, done safely, and then you have sufficient data to even start planning for future surveillance and regulatory enforcement. But you landed a very interesting point, which is that there is an ecosystem that starts with the regulator, the market infrastructure, the exchange, the depository, the clearinghouse, as well as the investors and the operators that intermediate. It then leaves me to ask, let me start with Jumoke, and then I'll come back. Same, Sean, I'll come back to you on same point. That how do all these players, all these stakeholders in this ecosystem, clearly we've seen that there is value to be had. There's value to everybody in the ecosystem, to be fair. How do all of these players then come together, partner up to deliver this value to market participants?
You know, this question you asked me took my mind to a quote I saw, and I forget who said that quote now, but I do believe he's one of the CEO of one of the big consumer tech businesses. And he was speaking to AI and jobs, and I'll bring it back to capital markets. And his statement was, no, AI will not take your job. The guy using AI is the one who will take your job. And I so agree with that statement, right? Because as we've said, AI being one of the many innovations that are very, very topical and impactful today, cannot thrive unilaterally without human intervention at the end of the day, in one form or the other. I'm going to bring that to the question you've just talked about, which is that we all must agree, or we do all agree, that we cannot ignore this thing called AI. We cannot ignore digital innovation. We cannot ignore how the world has moved and say because of the risk, because of the complexities we see in it, we're going to abstain. Abstinence then means you dry up and you die. And that is what would happen to our capital market if we do not get to a point where we realize that we must plug in, right? We must plug in. But the beautiful thing is we have the choice how we want to plug in, right? We don't have to accept absolutely everything out there. And so I think it starts with once all the parties realize that crucial central message that we cannot isolate ourselves from the development that is happening globally if we want to have economic development, if we want to have economic prosperity, if we want to be plugged into the global economy. We do not have a choice. We have to be plugged in because we export, we import, we travel, we come back. We are not an economy that is isolated. Exactly. We must interact with the economies out there. Then we must find a way or agree that we have to plug in. And so I think we're right on the path. The first catalyst, the foundational law, the foundational guidelines, and the guardrails had to be defined. First of all, remember that there was a time where we didn't know whether do we accept crypto, is it a security or not? Do we touch it in Nigeria or not? But that all of those ambiguities have now been properly cleared. With that, now everybody is on the first, we're all at the first line. We all agree. It's now a security. We accept it, right? The next question is how do we deploy it and what are therefore the things we need to deploy it, and then everybody comes to play in that. So it may sound like there's so many moving parts, but I think that the way we've evolved recently, the foundational and building blocks that have been put in place to help the market start to think and direct its mind towards that. I mean, the SEC has done a lot. I see a lot of educational materials coming from the SEC on digital currencies and how they can be safely used. That is the right way to go. Coming from the right party, the trusted parties, right? That is the starting point. It therefore gives credence to when a party who is also, I will use the word endorsed, and I use that word endorsed in the sense that it's a licensed SEC party or a licensed SEC platform, a licensed SEC operator is therefore now saying, I have a digital asset to offer you, I have a platform to offer you. You know that it would have gone through the protocols that would make sure that what is being implemented or being given in the market, the proper structure and the proper safeguards. So I think that like project management, if you think about the big picture, you will not go anywhere and you will not start. But if you think about it in phases, if you think about it in the smaller sub-projects within the program, then you would find you'd wake up one day and realize that we've all, we've literally delivered it. And so that's what I see going on in the market today, Nigerian capital market specifically today, that it's on a journey and we're getting to where there's now the interest, there's now the application because the foundations have been put in place. We know the SEC has licensed a few crypto platforms, digital asset platforms, and is now let's test it in the market space. Will it take off immediately? We cannot tell. Nobody can tell. People would try. I'm sure they're curious minds. I'm curious as well. We'll test it, the success of it and all of that. And as it progresses, there will be learnings from it. And we go back to the drawing board again, whether the regulation needs to be updated, whether guidelines need to be updated, whether the asset innovators themselves need to tweak things, to make it even more acceptable to the investor. And the education that needs to go out there continues. Then yes, I do believe that in small bite size, everyone is already plugged in. and everyone is already doing what they need to do to get us there. I just don't think anyone should expect an explosion, and I really don't think that's what I want to see as well. I love the paced journey that we're taking to get there. It's better to do that and have it in a solid foundation, and then we'll be able to count the successes in the couple of years to come.
Interesting. So, Seun, it appears the regulator has been forward-thinking. The SEC has made sure that it has created a framework, is already mobilizing market participants, so to say, and licensing them. Then the question then is, for infrastructure like FMDQ, what role do they have to play in one, ensuring a safe market, but two, also adopting some of these innovations and making sure that they are widespread?
It's a very nice question you ask. At the same time, it does feel like you're asking me to divulge my trade secrets in some form. Yeah? Because obviously, yeah, I think from a market infrastructure standpoint, again, I'm in the midst of all of these things that we have spoken about. Ultimately, the use and deployment of all of this innovation, right, will always come down to how you deploy it across the financial markets value chain. Whether it's in how do you use it, or what use cases exist in the pre-trade, in trade, in post-trade, clearing and settlement. Because even when you think about it in the most fundamental, from the most fundamental standpoint, when people engage you and talk about digital, distributed ledger technology and all of those things, all they're talking about is really how records of ownership are kept and exchanged, which will instantly pick your mind towards thinking, oh, it's a post-trade service solution. But again, for financial market infrastructure, that's the perspective for which you're going to have to think about it. And what are the use cases across each of the value chain? And obviously, I mean, I've just spoken to one which speaks more to like post-trade again. So how do you use it in that space? But then if you even go forward, then you start to talk about some of the things Jumoke alluded to earlier, to saying, look, investors are interested in it as well. Does then this suggest that there are also use cases from even product standpoint, which is somewhere financial market infrastructure will always take leadership in, because a lot of times when you start coming to world of exchange trading and all of that, then financial market infrastructures loom large in terms of product development and even getting everybody with the right awareness, education to be ready for those initiatives. But I think one other critical element about it is that there's also now that very, very big need to sort of customize it a bit for the behavioral tendencies of the jurisdiction in which you want to use it. Again, what are people's natural biases for investing here? Investor biases, they're fundamental things. Nobody wants to lose money. Everybody wants to make money, right? But there are certain environmental and cultural biases that also influence how investors within a particular ecosystem behave. Yes, we're all getting integration. Market integration means that there is a propensity for things happening overseas to influence people a bit more. But again, you will not completely be able to lose that, what I call domestic and local flavor, which will then influence people's natural biases and their appetite and their risk aversion to some of these products that you're going to be layering this innovation and technology on. So that is one finesse and technical know-how that your financial market infrastructures will need to sort of bridge. Because on one hand, yes, we know what the SEC has done, we know what the regulators have done to try and put the foundation down for these things to be able to thrive. But then, how do you then take it from there to the next level, factoring in all of these things that we have been discussing, investor protection, protecting ourselves against risk, and all of those critical things that we've been talking about earlier. So that is where financial market infrastructure comes from. And like I said, again, if you ask a guy like me, then I'll just tell you that I'm looking at it from a value chain standpoint. How do you deploy pre-trade, trade, and post-trade? And then when you go from there, you can spread out and then deliver what you can be reasonably assured that the investor community within your jurisdiction, your ecosystem, will be able to, come on board with and then begin to use it in the way you want them to use it from an investor participation and general capital market efficiency standpoint.
Thank you, Sean. A very interesting thought that occurred to me that before we leave this session today, I must ask you, Emmanuel. There is a demography of Nigerian investors, the young demography.
You mean us?
I'm not so sure anymore, Joe. I'm not so sure. I'm not so sure, Emmanuel, that it would be fair of us to leave here without talking about how artificial intelligence, AI, can be deployed in a financial market setting. What are the new trends? How is it to be deployed? Are there anything, especially in the Nigerian climate, is there any new trend that we should be talking about in terms of how AI can be deployed in the capital market?
Good question. So the first thing to look at is what are the use cases for AI in capital market? Once you identify the use cases, which, by the way, you need to properly assess, analyze properly, do your impact analysis, ensure that the models you're using are good. You engineer out all the biases and anything negative with the models. And it's also a regulated model. It's also regulated because if it's not regulated, then it's free for all, okay? So the use cases will be, for instance, fraud detection, real-time fraud detection, risk monitoring, yeah? You also need to build fail-safe mechanisms into your trading platforms as operators. Kill switch needs to be part of it, which is put a stop to all activities if you determine that needs to happen, and it needs to be rule-based. Circuit breakers can be activated. So there are different things along the whole value delivery chain that you can use AI for, right from onboarding of people through trading platform, both pre-trade, trade, and post-trade, and also those that are going to participate in that. I spoke earlier about decision support systems as well. Again, these are things everybody can take advantage of. You don't even need to pay anybody for that, except you're looking for a Rolls Royce of a support decision system. So once you identify those use cases, the next thing then is, how do we introduce it into the market? Who and what is composed of the target market? And how best can we get them? We all know that we have a young population. We all know that the population is exploding. It's going to get to 400 million or something by 2050 or so. We all know that they are technology savvy. So we've solved a lot of the problems. We all know that the access to such platform is also easy because most people have mobile phones. And most of the applications are consumable through small footprint devices. So again, most of the issues are resolved. It is now the duty of market operators to craft value propositions that enables the young people to engage and consume and make money while the market operators also make money. So the approach then will be pilot. Do a pilot, and I know that SEC was trying to enable, and I've not checked if it has, sandboxes. Or you have your own sandbox, okay, where people can interact, test, validate. Everybody that needs to hang off that system, they can be sure that this is something I want to participate in. I'm protected. I can see potentials for money. I can see risk management is affected. Everything is good. And then it takes off. So that pilot exercise is important. It's good to do. You're going to do your stress testing. You're going to do your performance-oriented stuff. Make sure that everything is fail-safe. Okay? The next is also to codify the guardrails. My colleagues have spoken about guardrails. It needs to be codified. It needs to be understood. It cannot be arbitrary. And the technology is advanced enough to codify such guardrails. Anything that you need to do guardrail-wise, it can be done. I spoke earlier about data governance. If you lose my data, I'm not likely going to engage you for a long time until I'm sure that my data is safe with you. So data protection is important. Cyber security is important. Data governance is important. Who owns the data? What are you doing to protect it? Who are you sharing it with? Who is introducing risk to this? Who has access to to this data. That's also important. Next is to build capacity. The knowledge of AI is not as widespread as the other things that we've been familiar with. The pace of innovation is crazy. It's constantly evolving. New things are coming out every time. People have mapped out stages of AI until it becomes even surpasses humans and begin to be able to reason and make independent decisions like humans. Okay, we're still at generative AI level, but the things being done, to me, it's shocking at the level of advancement that has been achieved in a short period of time. So it's important to therefore build capacity, both for those that will operate, those that will use, and those that will engage with it, so that things don't get crazy. We've also spoken about consumer protection. If you don't protect consumers, they will run from you. There's no hard and fast rule about it. You will not find them. And Nigerians, even the young, they're very skittish when it comes to losing money. They're smart. There's not much money around, so you've got to be smart with the little you have. So if you lose this 1 naira, he's going to tell everybody, that guy lost my 1 naira, don't go there. So operators need to be sure that consumers are protected. And the SEC is also I've seen a lot of work being done in protecting consumers. And we need, as operators, we need to take that to be very important and make sure that we facilitate that. The last I'm going to talk about is the learning, the positive feedback loop for learning. You've got to keep learning. You can't get it right first time. You can't get it right second time, but you keep improving on it. There's an 80-20 rule. The first 80% is easiest to achieve, and every percentage increase towards 100 becomes increasingly more difficult and more expensive, and it takes more time. But the way not to lose the learning is to review what is going on and feedback the learning into the whole stack, the whole service stack, the whole value chain. So you keep improving it. That's the way the more matured markets have grown. And we need to take that on board and ensure that we can facilitate. Sorry, one last one. Systemic perspective. You don't build one tree doesn't make a forest. So we've got to take that perspective in either our learning processes, in the feedback I spoke about, in building out infrastructures, in building our capabilities, and everything else that we need to do. There's enough room for people individual institutions, to be creative and create their own product. And by the way, if you create a great product, you still need others to hang off it and be able to contribute to that. So you must interact with people. You must build that relationship and ensure that everybody benefits. All and right. If you do that, you've got a winning solution.
I mean, I don't know what Emmanuel was saying about AI not being so widely used. I'm sure if you go search, what is the most searched or most asked question of ChatGPT from Nigeria? It's going to be, how can I make ₦1 million in 1 month?
In 1 month. But that's not the capacity I'm talking about.
Well, at the end of the day, it's financial literacy in some form, and I would want to hope that ChatGPT will tell him, invest in bills, bonds, or whatever the likes would be. I think what I just wanted to pinpoint with that, with what I brought up to your question was, these youths, we are members of them, of course, are so savvy.
I'm not sure I can claim that.
They use it for they use it for so much that, I mean, they use it for every aspect of their life, that this should be one that must be top on their minds for financial literacy, financial guidance, financial sophistication. It's just such that where they search, they should find answers, and the answers should be readily available for them to implement it as well. That's just what I wanted to add to it.
Thank you, Manuel, for those as well. And by the way, if you're just joining us, we've been having a very interesting conversation around the future of Nigerian capital markets, smarter markets, a safer investment environment, and then the products that are readily available, in newer products, leveraging technology that can be made available on both the fundraiser side, trying to access capital, as well as on the investor side, trying to make some more money, putting it very simplistically. So you've missed quite a bit, and you need to check in back again on what we've discussed so far. But again, to close the session, I'll just be asking you for nuggets or closing lines, if you may. So starting with you, Seun, last words for the conversation so far.
So I think
In very few words.
So, like Manuel and Jumoke spoke about, we the young people,
Yeah.
we're leveraging AI a lot. So everybody in the market has to essentially jump on the train in terms of how you begin to have a second look at how innovation, digital technologies, and all of those things that we have been speaking about earlier on help bring the next generation of financial market participants into our current financial markets as we know it, in such a way that we drive interest, we drive that knowledge base about the product and just the world of use case that is possible, so that again it becomes that connected ecosystem that we have been talking about.
Thank you, Seun. Jumoke?
I would just go back to that, what you call it, word nugget that I read out. AI is not going to take your job. It's the guy using AI that's going to take your job. So AI is not going to implode this market, or I don't know how I'm going to how do I convert it for the capital market side of things. I'm going to say the guy who uses AI is going to be the next billionaire or whatever you want to think about there tomorrow. Yes, there's no doubt the environment we are in Nigeria today is one where everyone is a lot more aware and looking for opportunities to make more money in a savvy and safe way. What is absolutely clear is that you cannot ignore the evolution of digital capital market. Let me coin that. If you have not adopted and implemented and looked into how you can use that in your investment and financial, in the financial part of your life, then you just might be left behind on the train. So you need to get on board, but get on board safely is what I'll say.
Thank you for that. Emmanuel, last words?
I'll go with the general trend. You can't stay out, jump in safely, embrace it. It's going to be disruptive. It's going to take some people out. That's just the truth. But if you're able to embrace it and work with it, you just increase your chance of surviving and be ahead of the game. So that's the last trend.
Thank you. Thank you very much, Seun, Jumoke, and Emmanuel. And our viewers over there, we're wrapping it up. But just leave you with some few words to say, look, there are new innovations coming into the market, new products, new opportunities. And then there are guardrails that have been put in place by the apex regulator, the Securities and Exchange Commission, as well as activities that have been put in, roles that are being played by the infrastructure, the capital market operators, as well as you, the investor as well. The need for knowledge is significant. And I think the opportunity for growth and development of the Nigerian financial market and indeed the economy there is no better opportunity or better time than now. And we look forward to a Nigeria that we'll all be proud of, where prosperity permeates the entire market and the entire economy as a whole. Thank you very much. Thank you one more time for making this a very interesting conversation.
Thank you.